Hello and welcome to Weekend Investing Daily Bytes. We are shooting episode 198. It's 21st of March. We are soon coming to our 200th episode and almost a year since we started this. We've received a lot of love and feedback that this helps in general information about the market, additional knowledge about various psychological aspects of investing, as well as the update on all portfolios, etc., and several kinds of calculators, etc., that we keep providing. So I'm happy that you are liking this series, and that's what motivates us to continue doing this. Today's one of the topics is to not overthink and just go along with your investing without overthinking about the markets. But first, look at the markets. So after this ferocious pullback from the bottom in the last 4 or 5 sessions, market still opened higher, but throughout the day continued to there was profit booking in the market. Also, overseas US futures were down, and the market seems a bit tired of this sudden gush and wants to consolidate. Most sectors were down between 0.5% to 1.5%, and I'm suspecting that the FII sales have started again because most of the large cap names were under pressure. Only metals, commodities were least impacted, as oil has also started to move back up. So from below $100 after hitting 139, then to below 100, and now again at 112. So the war situation continues and the commodity inflation continues. So this euphoria about things normalizing may have been premature, and the next few days will tell us whether we are going back down or we are consolidating somewhere near these levels. In terms of the broader indices, only the small and mid cap sections were slightly in the green by the end of it. Other than that, mostly large caps, and even up till CNX 500, we were seeing a profit booking. In terms of weekend investing small cases, MI30, MI80H, MI80H2, they were all doing well. In fact, a lot of the small cases did very well, except of course from the ones which are totally large cap focused, on LTCNX 200 and NNF10. EverGreen, although being large focused, still managed to do very well at 0.47%. So all is reasonably good on this front. In terms of the individual stock movements within the CNX 500 universe, so Valiant Organic moved up 20%, Wockhardt moved up nearly 12%, Sterlite Tech moved up 10% along with Delta, and Uflex was up at around plus 8%. Future Retail down 8%, Dhani Services, Petronet, Suntech and Gas Authority all moved between 4 to 6% down. This was a tweet that was sent out that sometimes we get caught up in the short and medium term market movements in such a way that we lose the longer term perspective. And this chart is actually showing you a 30-year Nifty movement, and you can see that over a period of 30 years there were only significantly 2 years which were negative, significantly negative. So this was 2008 and this is 2012. Primarily only 2008 was a huge negative year. Of course, we had a intra-year dip in 2020 and intra-year dip in 2015 also. But net from end of year to next end of the year, you really did not see the market doing so badly except these couple of candles. So inherently, because we are a part of the growth market, inherently there is enough evidence to suggest that the long term still remains very much intact. It is only the small and medium term turbulences that we have to bear and to ride over. So, when you come into a strategy, when you're deploying money into the markets, investing money into the markets, think 5, 10, 20 years kind of time frame, because you can always hit this rough patch after a huge run up. You can hit a rough patch for 3, 4 years before the market discounting, the prices discount that had run up ahead of the earnings catches up, and then the earnings catch up again. So we've had a run up in the last 4, 5 years. Maybe we'll get some few years of not so running markets as such. We may have a flat year, we may have another flat year after this. So that is always possible. But over a longer period, you are seeing that the market is robust in terms of its growth. So keep this in mind when you do long-term investing, that 1 year or 2 years or 3 years does not make up the investing span. You have to think longer in that way. Another insight that we saw, there was this tweet about best performing stocks in the last 2 years. So the beauty of momentum investing is that it will automatically catch most or all of the momentum stocks that are running. So several of these stocks were from the Adani pack. Adani moving from 1200%, Adani Transmission, Adani Enterprise to 1200%, Adani Green, Adani Total Gas 1500%, Saregama 1800%, many stocks. So in some strategy or the other, weekend investing has ridden all these stocks, some to a large extent, some to a small extent. But nevertheless, staying with the strength has shown that it's a no-brainer to stay with the running stocks, with the strength in the market, and get out when the strength goes away. You may lose sometimes a bit, but then you would lose that in any other strategy also, right? So instead of guessing when the stocks will move, when the rally will start, you allow the stocks to tell you which stocks to buy and when to get out. So what to buy, when to buy, how much to buy, and when to sell. These are the 4 main questions that are answered at all points of times with a crystal clear clarity in the way we do momentum investing, and that has given the results that most people have enjoyed with us so far. So Syntax Industries, after their insolvency resolution, the existing shares are going to zero. This has been announced. This has been released to the exchange. It is widely available on Twitter. It is there in the newspapers. Yet, the fact that these stocks will go to zero. Yet, people continue to buy them. 60 lakh Syntax shares changed hands today, even at the lower circuit, worth nearly 5 crores. So there are people in the market who have this either an eternal hope that if I buy a penny stock, maybe it's like a lottery ticket, or 2, people are not informed. They don't want to read about why a stock may have fallen. Why should I buy it? My sense is that any stock which is at a lower circuit, unless you know what is happening, you should not be buying it. There is a reason why a stock is at a lower circuit. There are people who want to get out. Why do you want to consider yourself to be smarter than them in every occasion and just blindly buy? Why don't you find out why it is at lower circuit, and then if you think that the market is making an error and your thought process is right, then maybe you can go ahead and buy it if you have to, or maybe you can even hold on for a couple of sessions till the lower circuit comes off. What is the rush? It is not like it's at lower circuit and then it will start a string of 50 upper circuits just like that. It will come off, it will balance somewhere and then start to go up. So these are lessons to be learned by new users, especially new investors, that you must investigate why a stock has hit a lower circuit. Is that news or that development worthy of your investment anymore, or knowingly, if you are taking a risk, then of course it's a risk taking decision that you have taken, and sometimes that may work. But in this case, there is no possibility that these stocks will go up. These are going to zero. So these are some hard lessons that people learn over and over again. New investors will learn hard lessons already learned by older investors. So this is a learning cost that some of us have to pay when you come to the market, but that's okay. I mean, once in a while you will have to pay this learning cost to learn something new. But the attempt is to impart that information ahead of you are paying the learning cost so that you may save some. So thank you so much for watching these daily bytes. You can subscribe to the channel, like the channel if you like, share it with your friends if you like, and I'll see you in another video. Bye.